Tricks of the Insurance Trade Series, Part 1, Understanding the Insurance Marketplace. The biggest 6 companies in the insurance market spend the most money on advertising, but are they the best? That's a reason that so many people insure with what I call the Big 6. It's not because they are the best insurance companies you can insure with. It's because they get your attention by spending tons of cash on advertising. In fact, combined, these 6 companies spend over $4 billion each year on traditional and digital advertising. The ads are often entertaining. Many are borderline misleading by omission, time constraints, and creative license. Was it Abe Lincoln that said it best? You can fool some of the people all of the time and all of the people some of the time, but you cannot fool all the people all the time. What makes a great insurance company? Is it the financial strength alone? Is it the service? What about the quality of the insurance policy contract? Have you ever read a policy? Okay, you can take the 5th. Too bad they don't take time to tell you what coverage you're giving up and not getting in the policy. That's what experienced, career-minded professionals, brokers, and agencies do. As a professional insurance broker, we've educated our clients. It takes more to make the right choice than cutesy ads, jingles, and price. As ad campaigns love to repeat, 15 minutes can save you 15%. Imagine this. Wouldn't it be much more honest and refreshing if the commercial were required to include this? 15 minutes can save you 15% and cost you a bundle. You give up true replacement cost, weaken your policy contract, and lose access to the advice of an experienced independent career professional that represents your best interest. The person at that direct competitive company only sells one company's insurance products. They won't last long there and are usually a non-resident licensed agent. So buyer beware when making your decision, and be sure you read the policy too, because they probably never did. Nor have they read, compared what you really have, or did a fact-finding interview. Because when you get a quote based on the little time spent on the quote, you can't blame them for you not being covered the way you think you are. You've heard of the bait and switch? That's when you get so many choices presented, get confused, then buy it, only to find out all the options and choices are not in one product or policy. The following is a real case history. We have documentation to prove this. Take one of Allstate's television and radio ad campaigns, for example. What if Allstate had to fully explain this? They advertise different levels, options, within their advertising campaign. They mention accident forgiveness, rate guarantees, return of premiums by dividend, and so on. You as a consumer think, wow, this is all in one policy? It sounds like an unbeatably great deal, and call for a quote. The only problem is that all of this is not in one policy. The benefits are separate and spread across several different policy types. You are fooled into purchasing a policy thinking you have accident forgiveness and dividends, but you don't find out until you have that claim, or the policy renews, or some other requirement that did not apply to the product sold to you. This really happened to our client, but they were smart enough to check with us first. We reviewed the 3 different levels of coverage and price points. They were shocked to discover the facts and, of course, stayed here. Being in this profession 32 years, I can tell you I've seen this before. This is nothing new. They're not the only company that does this sort of thing. I spoke to the Allstate agent personally, upon which he finally admitted to the client these facts. That agent also admitted he has never read a policy contract. He could not even explain what and how replacement cost limitations restricted coverage in Allstate's contract. Had they never met the other agent and taken my recommendation, they would have had a new car and no car payment. Unfortunately, there was serious consequences that resulted from this Allstate story. My client decided to strip away all the extra coverage to lower the premium to less than the Allstate quote, even though we recommended that he keep the auto replacement and loan lease payoff coverage. He said, no, I don't want to. I don't think it's worth it. A few months later, his wife totaled the 2007. As usual with car loans, it was underwater and payments still due. They had to buy a new car, roll the balance into the new loan, and get another 5 years, 60 months of payments. If only they never got involved with that Allstate agent or took my recommendation to keep his original policy. They would have had a new 2011 car and no car payment. Allstate's not doing anything illegal. All direct writer companies will follow the laws and regulations. Believe me, this is more common at every one of the direct writer insurance companies and many different ways. I've had similar interactions and experiences dealing with State Farm, American Family, Farmers, as well as both Geico and Progressive direct by phone policy contract sales comparisons. Keep in mind that Allstate's not the only company that has done this. They're the most recent example. Documenting my experience firsthand is available in more detail upon request. This online insurance seminar series is bringing a very serious recent trend to attention. Please watch carefully. I wish I could do this simpler like a commercial might. In the real world, it takes more than 30 to 60 seconds from start to finish. This may help prevent you from being induced into considering changes to any insurance program without getting a second independent broker review. Always call us if you have questions or concerns. Please share this with your family, friends, and neighbors. Help them avoid costly mistakes if they still insure with captive direct companies like State Farm, Allstate, American Family, Farmers, Geico, or Progressive Direct. First, here's some background with an analogy. With the economy still barely limping along since 2008 and no significant improvements to date, direct writer captive insurers have been desperate to keep profits up and maintain market share. Their investments are suffering and more people are leaving for independent professionals they can trust. The direct captives primarily compete with high-volume advertising and price only. Many have no other choice but to modify their policy contracts instead of raising rates. This allows for greater profits by reducing the claim costs. Analogy. Restaurants and grocery stores might shrink portions, water down a drink, sell pink slime, ground beef. Recently in the news, the cheaper beef filler used in place of high-quality beef in order to increase profits and keep prices level. Oftentimes the public hardly notices until someone brings attention. This is the direct captive insurance carrier's version of stripping away value and benefits without the public noticing. All of this is simply to say that working with an experienced independent insurance agent in your area is the best choice. You have come across our agency, Bob Corvus Agency, which operates in Illinois, Arizona, Wisconsin, and Indiana. As you can see, our agency has great online reviews. Here is a link to some of our online video testimonials. The best way to find a local agent outside of your area above is to search online, as you did here, and find someone that has a good online reputation, as well as positive client video testimonials. Don't hesitate. Pick up the phone now and call to set up a phone consultation with Bob at 847-470-8830 or visit onecallusa.com for a free quote within minutes. Thanks for watching.